This is Market Day Report, and we're trading today. Where are we with the corn market? Are we moving higher? Well, let's find out. Corn right now is on both sides of the trade. Got two contracts moving higher. We've got two unchanged, and well, you see the September there down a penny at 4.56 3/4. Now, soybeans. We've had a pretty good run here in the bean market. January right now, though, at 11.52 1/2, it's down 4 3/4 cents. I think one of the bigger stories right here is not that we're down a nickel on the January, but instead look at the difference between the low and the high, and that's nearly 22 cents. The fact that we have a 22-cent spread between the low and the high tells us that we've got some action back in these markets that for quite some time we're trading in, what, 5, 6, 7 cent trading ranges. All right, wheat is in the red. New crop July, it's down 2 at 5.75 3/4. And when we say new crop, this is what's in the ground right now. July hard red at 5.67. It's down 2. We've been watching wheat in Minneapolis higher across the board, and the cotton market is 29 higher, 62.65. Chris Swift is with Swift Trading. He's in studio with us. Always good to see you. We're watching the corn market move a little higher. That's feed cost, right?
It is, and we're seeing a little bit of commodity inflation in general. Diesel fuel within 10 cents of contract high. We're trading quite a bit higher again this morning. Not new contract highs, but again, 10 cents from it, and leaving crude oil in the dust. We're down 10, 20 cents on the crude oil, up 6, 7 cents in the diesel fuel, and then the gasoline, we're just kind of hanging down. But beans still climbing higher, corn a little bit higher, wheat finally trading up off of its lows. Cattle still highly elevated in comparison to years past, so it looks like we're kind of inflating in our commodity markets more than anything.
Okay, we get the WASDE report, World Ag Supply Demand Estimates. Got that on Friday. Any surprises? Anything jump out at you?
Not really. The market had been going up, so to see a little reversal of it, buy the rumor, sell the fact, and then again, right back the next day, here we go right back up again on Monday to new highs in the bean market. So meal is leading this rally higher, so hopefully we got better pork and poultry production out there, because it's about the only thing I know that meal would go for.
Okay, and again, we will come back in a moment. We'll talk livestock, but before we get to that, things like equities, what's happening on Wall Street, does that work its way into our commodities?
Absolutely,
as well?
it does, and bonds. So something that I've been looking about more than anything is interest rates, and interest rates look like on the bonds they've kind of built a head and shoulders. All we have done is just kind of gravitated off the lows that we had 2 years ago in the bond market, and we haven't decreased in inflation. All we decreased was the rate of inflation, but we haven't decreased inflation at all. So looks like the president wants some more stimulation out there. The more stimulation we get, more likely the more inflation we get.
Okay, we're rolling through the Dow. There's the NASDAQ with deeper losses this morning. S&P also moving in the red. And before we go to break, how about this? This one has been down for 5 straight sessions, trying to rebound a bit. But man, if you got into that Bitcoin back when it was trading at 120,000 or 130,000 per coin, that's a hickey you're taking.
That's a pretty good lick for something that doesn't exist, you know?
Love it. Love it. That's Bitcoin for you. Okay, we'll come back in a moment, and we'll talk livestock futures. This is Market Day Report. So live cattle futures have been higher 2 straight sessions. What about this morning? Where do we trade? Well, live cattle futures are in the red. December contract 219.82, down $1.45. 120 is the loss on the February right now at 220.67. The April contract is the premium right now at 221.15, and we trade 67 cents lower. Feeders are lower as well. January off $1.27 at $325 a hundredweight. Hogs trying to bounce back. Front 2 months are back in the red, though. with the deferreds moving higher. We'll throw one more in here just for fun. Class 3 milk is moving lower. Chris Swift is with Swift Trading, and let's get back over from the Class 3 side back to the cattle and the beef side of this. Getting a lot of headlines right now. What are your thoughts on just all of the headlines we're hearing?
It's created a tremendous amount of volatility. We've seen some enormous price expanse, and what I think is happening is we're finally kind of realizing that there are still a lot of animals out there that are non-reportable. The farmer feeder, anything under 900, under 1,000 head is non-reportable. We're under the impression that there's a lot of those farmer feeders out there because of the cheap price of corn. They bought cattle all throughout this year, fed them, and just kept feeding them instead of rotating them like what a beef cattle operation might do. Every 150, 190 days, we're going to rotate our stock. They don't. They buy something and hold on to it, and now we see we've got increased slaughter weights. Probably going to have a little bit of increased more cattle. We know that most every packer has been able to achieve cattle over the last week. So we kind of just slow down a little bit on everything, but we haven't gotten the borders open yet. We don't have much imported meat coming back in, and the 10% reduction of the tariffs on that will benefit secondary meat processors that may service food service or hospital services, something like that. But to the cuts, the restaurants, and to everybody else, it won't make any difference.
Okay, and again, before we go here, there is a tug of war, I guess is the best way I can describe it, between those who want the government to step in and fix some things, and those who say, no, we don't want the government at all. Final thoughts here, and anything we can kind of take to the bank in this debate?
For 35 years that I've been doing this, nothing has ever changed. Government influence has always been around, and it always will continue to be, and everybody wants to make money in this business. And when somebody tries to take that money away from you, you tend to be a little bit more aggressive. So really, things just haven't changed in 35 years. We still want to make money. Government still wants to be able to try to even the playing field out a little bit.
I know it's been described as a pie, and every sector of the industry needs a slice of it. Maybe it's more like a pizza.
Right.
I enjoy eating half of the pizza myself, but sometimes I need to give up a little.
Absolutely.
All right. Always great to see you. Chris Swift is with Swift Trading, and so now the talk of pizza has me ripped.
I was about to say.
I am a sucker for pizza.
I have a feeling you don't stop at half either.
Oh, no, I will wipe a pizza out.
I have no doubt, no doubt. Well, thank you both, gentlemen. We appreciate it.